These are the 7 most common mistakes that absolutely kill your credit score, and most people have no idea that they're making them. Now, out of the over 4,900 people I've personally worked with to repair bad credit, most people think they understand credit scores, pay your bills on time, don't max out your credit cards, check your credit report, but there are hidden mistakes that can drop your score by 50 points overnight, and I guarantee you're making at least 2 to 3 of these mistakes without realizing it. And by the end of this video, you'll know exactly what's secretly sabotaging your credit score and how to fix it immediately. But before we dive in, if this helps you avoid credit score disasters, all I ask for is you drop a like, a subscribe for more credit repair secrets. Now, mistake number 1 is letting authorized users destroy your credit. This is the mistake I see more than any other, and it's devastating because most people have no idea it's happening. When you add someone as an authorized user to your credit card, your spouse, your kids, your parents, their credit behavior affects your credit score. If they max out the card, miss payments, or get declined for other credit cards, it can tank your score. Here's the worst part. The authorized user's other debts and credit problems can also impact your score. Even if they've never used your credit card, some scoring models factor in their entire credit profile when calculating your score. I've seen people with perfect payment histories watch their scores drop 80 points or more because their authorized user got into financial trouble, and most people don't connect the dots. They just see their score falling for no reason. The fix: remove authorized users who have poor credit immediately. Check your credit report to see all authorized user accounts and remove anyone who isn't financially responsible. Mistake number 2 is using your credit cards right before applying for credit. This one kills me because people do it thinking they're being responsible. You're about to apply for a mortgage or car loan, so you pay down your credit cards to improve your debt-income ratio. Smart, right? Wrong. If you use your cards for normal expenses while you're in the mortgage process, your credit score can drop right before your final credit check. Here's why. Most credit cards report your balance to credit bureaus on your statement date, regardless of whether you pay it off or not. So even if you pay full every single month, if you have a balance when the statement generates, it shows as utilization. And I've seen mortgage deals fall apart because someone's credit score dropped 15 points between pre-approval and closing because they used their credit card for moving expenses. The fix: stop using your credit cards entirely 2 months before applying for major loans. Pay them down to 0 and don't touch them until after you close. Mistake number 3 is closing old credit cards. This mistake is becoming more well known, but people still do it constantly. They pay off an old credit card and think, I don't need this anymore, and close it. Closing old cards hurts your credit in 2 ways. It reduces your total available credit, increasing your utilization ratio, and it can lower your average account age over time. But here's what most people don't know: the impact isn't immediate. Closed accounts stay on your credit report for 10 years, so your average account age doesn't drop right away. People think closing credit cards doesn't matter because they don't see an immediate score drop. The damage happens years later when that old account finally falls off your report. Suddenly your average account age plummets and your score drops significantly. The fix: keep old credit cards open with small purchases every 6 months to prevent closure due to inactivity. The only exception is if the card has an annual fee that you just can't justify. Now, mistake number 4 is one late payment, even if you pay the same day. Most people think a late payment only matters if you're 30 plus days late. That's wrong. Some credit card companies report late payments to credit bureaus, even if you're just 1 day late and pay the same day. Here's how this destroys people. You're traveling, you forget to pay your credit card bill, you get home and pay it immediately. You think, no big deal, I was only a few days late. Then your credit score drops 60 points. Payment history is 35% of your credit score, and even one late payment can have a massive impact, especially if you have a limited credit history. And the worst part is that some companies are more aggressive about reporting than others. For example, American Express and Discover are notorious for reporting late payments quickly, while other issuers might give you a grace period. The fix for all of this: set up an automatic payment for at least the minimum amount on every credit card you have. Even if you pay manually most of the time, the automatic payment is your safety net. Mistake number 5 is high credit utilization. Even when you pay in full, everyone knows that maxing out your credit cards is bad, but most people don't understand that utilization is calculated based on your statement balance, not your actual debt. You could pay your credit card in full every single month, but still have high utilization if you use the card heavily throughout the month. For example, if you have a £1,000 credit limit and spend £800 during the month, even if you pay the full £800 before the due date, if your statement shows £800, that's 80% utilization, which is terrible for your credit score. Credit scoring models can't tell the difference between someone who carries a balance and someone who just uses their card a lot. All they see is the balance reported on your statement. The fix: make multiple payments throughout the month to keep your statement balance low, or ask for credit limit increases to lower your utilization percentage. Mistake number 6 is opening store cards for small discounts. Save 15% on your purchase today with our store credit card. Sounds tempting, especially on large purchases, but store credit cards are credit score killers. First, they typically have very low credit limits, so any purchase immediately creates a high utilization. A £500 limit with a £200 purchase is 40% utilization on that card. Secondly, these store credit cards often have terrible terms, high interest rates, limited usefulness, and aggressive collection practices if you miss payments with them. Thirdly, the hard inquiry from applying hurts your score, and the benefit is usually minimal. That 15% discount on a £100 purchase saves you £15, but could cost you points on your credit score that takes months to recover. Now, the fix for all of this: just say no to store credit card offers. If you want the discount, ask if they offer alternatives like email sign-up discounts or loyalty program benefits. Now, mistake number 7, not monitoring your credit report for errors and fraud. This should be obvious, but 79% of people don't check their credit reports regularly. Errors are incredibly common. Incorrect accounts, wrong payment histories, outdated information, or even identity theft. These errors can devastate your credit score. I've seen people with 20 points drop because their ex-spouse missed payments was showing on their report, or because a paid off account was still showing as active. Fraud is even worse. Someone opens a credit card in your name, maxes it out, and never pays it off. By the time you discover it, your credit score has been destroyed, and it takes months or years to fix. The hidden mistake here is thinking that checking your score is enough. Your credit score tells you something is wrong, but only your credit report tells you what's actually wrong. Now, the easy fix around this is to check your full credit report from all 3 credit bureaus, that be Experian, Equifax, and TransUnion, at least every 4 months. Use the free annual reports or services like Credit Karma for ongoing monitoring. Now, the final mistake, and a bonus mistake I'm going to throw out there for you guys, is thinking all credit scores are the same. This isn't one of the main 7 mistakes, but it's crucial to understand that there are dozens of different credit scoring models, and they can vary by 50 points for the same person. The score you see on Credit Karma might be 720, but the score your mortgage lender pulls might be 670. This happens because different lenders use different scoring models and each model weighs factors differently. The FICO score are what most lenders use, but there are multiple versions of FICO scores. Vantage score is what many free credit monitoring services show, but fewer lenders actually use it. This matters because you might think your credit is great based on one of those scores, but then get shocked when a lender pulls a different score that's much lower. What's the fix for all of this? Understand that credit scores are ranges, not exact numbers. Focus on the trends and overall credit health rather than obsessing over specific point values. Now, if you've gone through these mistakes and realize you've made some of them, the good news is that most of these mistakes are fixable. For example, the late payments. Set up automatic payments and wait. Payment history will improve over time. Secondly, high utilization. Pay down the balance or request a credit limit increase. What to do if you have a closed account? You can't undo this, but focus on keeping remaining accounts open. Authorize users. Remove problematic users immediately. If your credit report has errors, dispute them with the credit bureaus. If you have way too many inquiries, time will heal this, but inquiries matter less after 12 months pass by. And the key thing here is patience. Credit repair takes time, but consistent good behavior will rebuild your score way faster than you think. These 7 mistakes destroy more credit scores than any other factor. If you're making any of these mistakes, fix them immediately. Your future self will thank you. Which mistakes surprised you the most? Let me know in the comments, and if you've fallen victim to any of these, share your story to help others avoid the same traps. If the video potentially saved your credit score, smash that like button and subscribe for more credit repair secrets that actually work. I'll see you in the next video where I might be showing you the fastest way to repair your credit score after making these mistakes. Remember, your credit score affects everything from loan rates to apartment approvals. These simple mistakes can cost you thousands of pounds over your lifetime, but now you know how to avoid them.